Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva, they've got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 is now up almost 51 points. Ooh, market's moving. Let's take a look and see what that means for us here when we think about mortgages and the mortgage world, because that's what our friends at Geneva do. 10-year Treasuries up 2 basis points. The mortgage-backed securities are down 2 basis points after an ugly, ugly day yesterday on the mortgage markets. OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did loans actually do yesterday? 30-year conforming, 5.259. That was down about 4 basis points. Jumbos, 4.916, down about 10 basis points. 30-year FHA loans, 5.23. 30-year VA loans, that's the best loan on the market for those who earned it. 4.94 on the 30-year VA loan. And out in those rural areas, 5.203, the 30-year USDA loan. But why is all of this happening? Well, pretty simple analysis of why it's happening. The Federal Reserve yesterday, the clueless crew. So they came out yesterday. Bullard said that, and this is the St. Louis Fed president, said that people are mistaking the Federal Reserve's resolve and they're not going to cut rates next year. Baloney. If you've been listening to Ron Siegel Radio, you know I told you 6 or 7 months ago we were going into recession. But the Federal Reserve presidents, they don't think so because they don't look at history. Mary Daly, the Fed is quote unquote, nowhere near done fighting inflation. That central bank officials are, quote, still resolute and completely united, unquote, in the task of achieving price stability. Loretta Mester, expects below trend economic growth for this year. Surprise, surprise. But she did not believe the U.S. is in a recession, giving the continued strength in the labor market. I think I've got a message here for her if I can find it quickly, but
I didn't know recessions were judged based on what you believed.
Isn't that amazing how they do that? That's
So
just
they're rewriting history right in front of us.
Is that the pronoun?
Such an idiot.
Yeah.
Such an idiot.
Oh yeah, we shouldn't say that about him.
it.
Charles Evans, 50 basis point increase at the next meeting in September would be appropriate. However, he left the door open to 75 basis points. James Bullard, with hotter inflation numbers in the spring, we should get to 3.75 to 4.0 before the end of the year. That's 150 basis points more in rate hikes. He also said that the U.S. is not in a recession because the job market is strong. Okay, if you're a regular listener of Ron Siegel Radio, you know that recessions start when the job market is strong. They don't start when the job market is weak. The Federal Reserve creates that weak job market, but they don't understand that. Spread between the 10-year and the 2-year Treasury is now at 33 basis points, a negative. That's an indicator of a recession. 2 consecutive quarters of negative GDP, Q1, Q2. That's a recession indicator. We always see recessions happen when the unemployment rate is at its lowest point and then turns higher, not when unemployment is high. Got to remember that. Here's the issue. Here's the Federal Reserve. Now, if you want to think about this one, Blake, we don't want you to pipe in on this one because this might be scary. If you are driving a car, assume that the Federal Reserve is driving a car, right? What the Federal Reserve is doing is they're looking in the rearview mirror the entire ride. They have no idea what's going on in the windshield. So, they wouldn't be looking at me in the rearview mirror. That would be scary. Or you either, Jim. That's a whole different story. But they're looking in the rearview mirror. They're looking at the unemployment numbers. Okay, they look good. Why? Because people dropped out of the employment workforce. They didn't look at what the JOLT number is. Oh, yeah, that's a forward-looking indicator. Job openings and labor turnover fell 600,000 jobs in June. 600,000. The number of hirings fell for the 4th straight month, and the hiring rate fell to 4.2%, which matches the lowest since January of 2021. So we'll get the job numbers on Friday, but if you remember last month, we added 313,000 jobs on the BLS number, but we lost 320,000 on the household survey. and 353,000 people dropped out of the job market. So it's not an issue that the jobs is in such good shape. The issue is they're not looking, or they're not smart enough, or they're trying to lie to you. I don't know which one it is, but
I got a bad feeling about this.
yeah, so do I. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.